Investing in real estate is often seen as one of the most reliable ways to build wealth. However, despite the lucrative opportunities, many beginners are held back by misconceptions that prevent them from taking the first step. Today, I want to address three of the most common myths surrounding real estate investing. These myths often keep potential investors from capitalizing on one of the most powerful ways to grow their money. By debunking these myths, we can give aspiring investors the confidence they need to make informed decisions and start building their portfolios. The first myth I want to address is the idea that you need a large amount of capital to get started in real estate. Many people believe that in order to buy an investment property, you need to have a substantial amount of money saved up, often thinking that they need a large down payment or the ability to buy a property outright. The reality is far different. While having more capital certainly gives you more options and flexibility, it is not a requirement to get started. In fact, there are many creative financing options available to investors that can significantly reduce the initial capital required to purchase a property. For example, there are loan programs specifically designed for first-time investors that allow for lower down payments. There are also other options like seller financing, which allows you to bypass traditional lenders altogether by negotiating directly with the property seller. Another method is using hard money loans, which can provide short-term funding for real estate purchases at higher interest rates, often with fewer requirements for down payments or credit checks. Additionally, you can consider house hacking, a strategy where you buy a multi-unit property, live in one unit, and rent out the others. This allows you to generate rental income from the property, which can help cover the mortgage and other expenses. House hacking is a fantastic way to start small, learn the ropes of real estate investing, and gradually build equity in the property. It's also an excellent way to leverage your existing assets, like your primary residence, to fund additional real estate investment. Moreover, there are opportunities in the real estate market that require far less capital than buying traditional properties. Real estate investment trusts REITs, for example, allow you to invest in real estate without the need to own physical property. REITs pool money from multiple investors to purchase commercial and residential properties, and the returns are distributed among the investors. This is a great option for people who are interested in real estate but lack the funds to make a large purchase. The second myth I want to tackle is the idea that real estate investing is only for experts or people with years of experience in the industry. Many beginners are intimidated by the prospect of investing in real estate because they believe it's a highly complex field that requires specialized knowledge. This couldn't be further from the truth. While it is true that real estate investing does involve a learning curve, it's not an insurmountable one, and with the right approach, anyone can get started and succeed. First, it's important to understand that real estate investing is just like any other skill. It can be learned. You don't need to be an expert to begin. You simply need to start taking action and learn as you go. There are plenty of resources available for beginners, from books and blogs to podcasts, YouTube channels, and online courses, all designed to help you understand the basics of real estate investing. Moreover, when you invest in real estate, you don't have to do it alone. You can build a team of professionals who can help you navigate the complexities of the market. A real estate agent with experience in investment properties can help you find good deals. A property manager can take care of the day-to-day operations of your rental properties, and an accountant can help you manage the financial side of your investments. Additionally, you can connect with other real estate investors through local meetups or online forums where you can share experiences and learn from one another. It's also worth noting that real estate investing offers a variety of strategies, and some are simpler than others. For example, investing in turnkey properties, where you purchase a property that's already renovated and has tenants in place, is a relatively low-risk strategy that requires less active involvement. This type of investment allows you to start earning passive income right away, and you can hire property management companies to handle the day-to-day tasks. On the other hand, more active strategies like fix and flip require more knowledge, time, and effort, but they can also offer higher returns if executed well. The point is that there are different ways to invest in real estate, and you can choose the strategy that best fits your skills, interests, and risk tolerance. The third myth that often stops beginners from investing in real estate is the idea that the market is too unpredictable or risky. Many people are afraid to invest because they fear the market will crash or they won't be able to sell or rent out a property when they need to. While it's true that real estate markets can fluctuate, real estate has historically been one of the safest long-term investments. It's important to differentiate between short-term market fluctuations and long-term trends. Real estate, by its very nature, is a relatively stable investment. Unlike stocks or bonds, the value of a property doesn't fluctuate on a daily or weekly basis. Instead, the real estate market tends to move more slowly, with values increasing over time as demand grows and the supply of land remains limited. While there may be periods of downturn or stagnation, the real estate market has consistently recovered and continued to grow in the long term. In fact, even during economic recessions, real estate has proven to be a resilient investment, especially if you focus on properties that generate rental income. Furthermore, investing in real estate can provide a hedge against inflation. As inflation rises, so do rents and property values. This means that your investment properties can appreciate in value over time, providing both capital gains and rental income. In addition, owning real estate allows you to take advantage of tax benefits such as deductions for mortgage interest, property taxes, and depreciation, all of which can improve your cash flow and overall return on investment. If you're worried about the unpredictability of the market, one of the best things you can do is to conduct thorough research before making any investments. Learn about the local market trends, the neighborhood you're interested in, and the factors that drive demand in the area. By educating yourself and staying informed, you can make smarter investment decisions and reduce your exposure to risk. It's also helpful to focus on long-term strategies like buy and hold investments, which allow you to ride out any short-term market fluctuations and benefit from the steady appreciation of property values over time. In addition to this, diversification can help mitigate risks. Instead of putting all your money into one property or one location, consider spreading your investments across multiple properties or even different types of real estate, residential, commercial, or mixed use. This way, if one property or market experiences a downturn, the others may offset the losses. Ultimately, the key to minimizing risk in real estate investing is to have a clear strategy and stay informed. It's important to understand your financial goals, your risk tolerance, and your time horizon for holding onto properties. By being patient, strategic, and educated, you can navigate the ups and downs of the market and make sound investment decisions. Now that we've addressed these three myths, capital requirements, the need for expertise, and the riskiness of the market, it's clear that real estate investing is not as intimidating or out of reach as it may seem. With the right mindset, a willingness to learn, and a strategic approach, anyone can start investing in real estate, regardless of their background or financial situation. The key is to take the first step, educate yourself, and start small if necessary. So to anyone who has been held back by these myths, I encourage you to take action. Real estate investing is one of the most powerful ways to build long-term wealth, and with the right knowledge and approach, you can set yourself up for financial success. Don't let myths and misconceptions stand in the way of your goals. Start your journey today, and remember that every successful investor was once a beginner who took that first step. The common misconception among beginners is that real estate investing requires a large amount of capital to get started. Many aspiring investors believe they need a hefty down payment, substantial savings, or the ability to purchase an entire property up front. While it's true that having more capital can offer you greater flexibility and access to a wider range of opportunities, it is by no means a requirement to begin investing in real estate. In reality, there are a number of creative financing options that can significantly reduce the initial capital required. One of the most common and accessible methods is through loan programs that are specifically designed for first-time investors. These loans often have lower down payment requirements, sometimes as little as 3 to 5%, making it much easier for beginners to get their foot in the door. For those who may not qualify for traditional loans, seller financing can be an alternative. In this scenario, the seller of the property acts as the lender, allowing the buyer to bypass banks or mortgage companies altogether. This can be especially advantageous for those who might not have perfect credit or a large savings pool. Another powerful strategy is house hacking, which involves purchasing a multi-unit property, living in one unit, and renting out the others. This allows you to generate rental income that can help cover your mortgage and expenses, potentially making it much easier to manage your financial commitment. Over time, as the property appreciates and you build equity, you may even have the opportunity to purchase additional properties, further expanding your portfolio. Additionally, real estate investment trust REITs provide a way to invest in real estate without owning physical property. Through REITs, investors can pool their resources with others to purchase income-generating real estate, allowing them to enjoy the benefits of real estate investing with minimal upfront capital. With all these options available, it's clear that you don't need vast sums of money to begin your real estate journey. A widespread myth that discourages beginners from diving into real estate investing is the belief that it's only for seasoned experts with years of experience in the field. Many new investors feel intimidated by the complexity of the real estate market and assume they need specialized knowledge to succeed. However, this couldn't be further from the truth. While real estate investing does require learning, it's a skill that anyone can develop with the right approach. The idea that you need to be an expert to invest in real estate is a misconception that often stops people from taking action. In reality, real estate investing is a process that anyone can learn over time. The key is to start small, educate yourself, and gradually build your knowledge. There are countless resources available for beginners, including books, online courses, podcasts, blogs, and even YouTube channels dedicated to real estate investing. These resources provide a wealth of information covering everything from the basics of property valuation to more advanced strategies like flipping houses or commercial real estate investing. Additionally, the real estate industry is built on collaboration. You don't have to do everything on your own. As a beginner, you can build a team of professionals to support you: real estate agents, property managers, contractors, accountants, and attorneys who can help guide you through the process and offer valuable insights. By leveraging the expertise of these professionals, you have the confidence and support to navigate the complexities of investing without feeling overwhelmed. Moreover, there are different investment strategies, and some require less hands-on involvement than others. For example, investing in turnkey properties where everything is already set up and tenants are in place is a great way for beginners to start earning passive income without requiring deep knowledge of property management. The real estate field is vast, and with patience and persistence, anyone can enter it, regardless of their experience level. Many potential investors shy away from real estate because they believe the market is too risky or unpredictable. The fear of sudden market crashes or not being able to sell or rent out a property when needed can make real estate seem like a volatile and uncertain investment. While it's true that the real estate market can experience fluctuations, especially in the short term, real estate has historically proven to be a resilient and relatively stable investment over the long term. Unlike stocks or other financial markets, which can see daily or even hourly changes in value, real estate is a more stable asset. The value of a property doesn't typically shift dramatically from one day to the next, which provides a level of predictability that appeals to many investors. In fact, real estate tends to appreciate over time as demand increases and the supply of available land remains limited. While there may be periods of downturns, such as during economic recessions, real estate generally recovers and continues to increase in value as markets stabilize. Additionally, investing in real estate offers a buffer against inflation. As inflation rises, so do rental rates and property values. This means your investment is likely to grow in value even when inflation erodes the purchasing power of cash. Real estate is often considered a safe haven during times of economic uncertainty because it can serve as a tangible asset that appreciates while also providing a steady stream of rental income. Furthermore, by adopting a long-term investment strategy, investors can weather short-term volatility. Focusing on cash flow and holding on to properties for extended periods allows investors to ride out any temporary downturns in the market. By doing thorough research and selecting properties in growing or stable markets, investors can minimize the impact of market unpredictability and build a secure wealth-generating portfolio over time.